Hello and welcome to this Forex Preview at XM.com. We'll be discussing the upcoming Fed minutes and the potential reaction in the markets and the dollar. I'm Maria Pachardez, and joining me is Senior Investment Analyst Haralambos Pissouros. So Haralambos, at the Fed's last meeting, officials delivered their fourth consecutive 75 basis point rate hike. What will investors be looking for in the upcoming FOMC minutes on Wednesday, and how might their expectations for the future course of interest rates be affected?
Hello, Maria. Yes, indeed, the FOMC delivered its fourth consecutive 75 basis points hike at its latest gathering, but following the latest US CPI data, market participants are largely convinced that the size of the December rate increment will be 50 basis points. Currently, they are assigning an 80% probability for such a move, with the remaining 20% pointing to 75 basis points. They are also pricing in nearly 2 quarter-point rate cuts by the end of the year, despite several policymakers trying to push against bets of an imminent pivot. Therefore, although the minutes could be considered as outdated, given that they will reflect officials' opinion before the inflation data was out, investors may still be interested in any conversation with regards to interest rates future course. After the latest gathering, several policymakers have clearly suggested that when interest rates hit their terminal level, they will stay there for some time. However, any hints in the minutes pointing to even the thought of a cut towards the end of 2023 could enhance speculation on that front, as such discussion would have taken place prior to the CPI data, meaning that if some of the policymakers thought about it then, the discussion may be more intense at the upcoming meeting. Now, on the other hand, anything strengthening the narrative of a higher terminal rate and a prolonged pause before policymakers start considering a cut could have the opposite effect, especially if investors keep in mind the latest rebound in the one-year inflation expectations. And to be honest, with most Fed members pushing against a pivot even after the slowdown in inflation, that may be the most likely outcome.
Okay, so given all this, what reaction are we likely to see in the dollar? And regarding the longer-term outlook for the U.S. economy, is a recession on the horizon?
Now, in case there is a surprising element that could be interpreted as a thought of a rate cut, the dollar may come under a renewed selling interest, while Wall Street may climb higher ahead of Thanksgiving Day. The opposite may be true in case the minutes confirm the narrative of no imminent pivot. Treasury yields could drift higher, adding some fuel to the dollar's engines, while stocks could come under pressure. Now, with regards to the overall outlook of the US economy, we will get more information before the minutes are released, as due to the holiday shortened week, Wednesday will end up being a data dump day for the US. Among the releases we get are the initial jobless claims for last week, the preliminary University of Michigan Consumer Sentiment Index for November, the new home sales for October, which are expected to have slid again, and the flash S&P Global PMIs for November. The services index, already within contractionary territory, is expected to have ticked down, and the manufacturing print is forecast to have just slid below the boom or bust zone of 50. Such numbers may add to worries about the recession and perhaps result in the liquidation of some more long dollar positions ahead of the minutes, even as the US dollar is considered the safe haven of choice nowadays. And this may be due to increasing fears over a recession, adding to the narrative of a slower than previously expected rate path by the Fed.
Haralambos, thanks so much. And thanks for joining us at XM.com.